Yo guys, I hope you're having an amazing day. And in this video, we're going to continue where we left off in part 1 of the daily bias video. First, we're going to do a little recap. And after that, we're going to dive in how to use this framework to do a top-down analysis and make entries on the lower time frame. So with that said, let's dive in. By now, you must know how the next day should play out. So in this example, with the bullish example, we have a bullish candle right here, and we mark the previous day high. And if the next day displaces over this previous day high, we expect the next day to be bullish as well. But if price fails to displace over the previous day high, so fails to displace above this red line, we expect the next day to be bearish, to make a reversal. Same here. When price fails to displace lower, below this previous day low, we expect a reversal and to trade higher. With that in mind, you should have a framework around what the next day should do. And we're going to use this knowledge for execution on the lower time frame, so how you can use this intraday. Now we have a bias where the next day candle probably will go and how the next candle will look like, if it's a bullish or bearish candle. We need to know how a bullish or bearish candle look like. And this example is a bullish candle. And how it looks is on the left side. So we have an open price. We have the low here at the bottom of the body. It's right here. The low we trade to the high. And then we finish at the close. So in a bullish day, if we expect a bullish candle, what we want to do, we want to mark out the open of the day, so the midnight open. And we want to buy below the open, around the low of the day. Here's a little secret. The low of the day is most of the time forming inside a discount array. For example, inside the fair value gap, or inside a bullish order block, or another discount array. Then it goes higher and also into a premium array, and there we should take out our position. Similarly, when we look at a bearish candle, we have the open, it's at the top of the body. We have the high of the day. Then we have the low, and we finish the candle with a close. And in this framework, we most of the time have used daily candles. So the big candles, big time, but price is fractal. So this means your 1 hour candle works exactly the same. Your 5-minute candle, your 1-minute candle, all have the open, high, low, close framework inside of them. But we're using for the daily bias, the daily candles. So we're going to use this framework for the setup and the execution on the lower time frame. Now we know how a candle works with the open, high, low, and close framework. We're going to look at the Judas Swing. This is a concept ICT teaches, and it's about how the price would react if we have a bullish day. So we start off with some consolidation around the open. Then we make the low of the day inside a discount array. Then we make a market structure shift. And then we push higher into the high of the day, and then we have a close. So the bullish candle looks like this, exactly the same how price will look like in real time. And when we mark this same open, high, low, close out, ICT also calls this the AMD Accumulation, Manipulation, and Distribution. So in the Asian session, most of the time we have the accumulation. So that's the consolidation. Then we make like a fake move. It's called the manipulation, and create the low of the day. And then we have a market structure shift and the distribution. This is the big move. This is what we want to catch. So the goal is to catch these kind of moves. Now let's dive into the chart and look at an example. At this day, price displaced above previous day's high. So this means we expect the next day to get the high of the day. And with that in mind, we're going to do a top-down analysis. So we're going from the daily to the 4 hour to the 1 hour. We're going down even more to frame a trade around the thing we just learned. So first we're going to look at some PD arrays we can find. There is a 4 hour fair value gap right here. Also, there is a bullish order block. I'm going to the lower time frames to see if we can get even better PD arrays. So right here, we have the smaller fair value gap right here, and this should be good. So we have a target, and that is the high of Tuesday. So this is our target. I'm going to mark this purple and very thick, so we know what the target is. And now we're going to frame our trade around. So first thing we're going to do is mark out the open. And what do we want to see? We're expecting price to reach the previous day high. So that means we are expecting a bullish candle. And we just learned that we want to see accumulation, then manipulation inside a discount array. We have a 4-hour bullish order block and a fair value gap. So somewhere around here, you want to see a market structure shift and then head into the previous day high. Let's see what price gives us. So this is the Asian. It consolidated quite a bit. So let's see how the London session will act out. So at the small time frame, I'm looking for setups, and it touched at the London open at 2 a.m. Yes, it makes a market structure shift right here, but it wicks again a few minutes before 3 in the morning to the order block again. So now I'm quite confident that price has done its manipulation. So now let's see where we can spot a market structure shift. And it does right here. It's a nice, we want to spot a market structure shift. When you don't know what the market structure shift is, I'm going to put a link to this video in the top right corner right now. So what we want to see is how this 5-minute fair value gap is getting respected. It's getting traded into this. So now what I would have done is taken a trade, stops below the last low. And we know when we have marked out the open, it's right there. Preferably we want to buy below the open so that we around this area. But I didn't trust this wick, so that's why I did not execute on this fair value gap. But now with this displacement, I'm quite confident that price will not come back here, but just going upwards towards the target. That's the previous day high. This is the target. We have a 7.3 RR. So when we have the big range or big target like this, I'm not like a unicorn trader. I don't want that big trades. So what I'm doing right then is, let's see how the risk can be averted. If price wants to trade back into this fair value gap, we still have a 3.5 R. So yes, you are getting less profits. It's not a 7 R, but a 3.5 R. But you are in the trade just in case price wants to come back. I don't think so. We also have some respected PD arrays. For example, this bullish order block right here is getting respected here with bodies. So now let's see what price does. It trades into the fair value gap, it trades below it, and comes to our bullish order block, and it trades away. This is the London, and if you guys are in the US and you don't want to trade London, we're going to frame at the same daily bias. It's the bullish bias, and we also already framed here a London setup. We're going to mark out a New York setup as well. And on big bullish days, what price does is accumulate, manipulate, distribute. But inside this distribution phase, we have a small retracement at the New York Open to get smart money in to go to the higher time frame target. Now we're approaching the open. And here it was a really fast entry. So I guess price wants to come down at the New York because we see a really aggressive move to the upside. It should mean that there will be a reversal coming soon. But if you want to go back to the example, here you have the fair value gap. You have 1, 2, 3 options to enter. That it should be enough for you to get the New York entry, New York Open entry. And there you have your target. Now I'm going to show you guys a bearish example. What price did? It displaced below the previous day low. So now we expect the day after to do the same. So this will be our target for the day. I'm going to mark this out again with a thick purple line. And we're going to dive into the lower time frames to see if we can find some premium arrays to trade from. So again, we are searching for this setup. So accumulation, manipulation into a premium array, and then distribution to the downside. I want to catch this move downwards. At the 4-hour, we can spot a fair value gap right here. There's already been traded to on Tuesday, but it still can be reused. And also there is a bearish order block right here. And you see how this gets respected. So let's dive into the lower time frames to go to the midnight because we're still on Tuesday. So now we are at the 15 minutes. We have our 4-hour fair value gap and order block marked out. So this could be our premium arrays. We'll have a more premium arrays form of a order block, small order block. Let's see, we want that accumulation It's right here. And we want that manipulation to the upside and then look for a market structure shift towards our target. And let's mark out the open as well. And preferably, we want to sell above the open. Okay, we see a touch few minutes before 2 or around 2 into the order block, the bearish order block. And let's look at the reaction from this point. We see a market structure shift because we see displacement. And what to do with displacement. And we know from previous videos, we can take an entry from the lower time frames that we used in 5 minutes for this example. We have a fair value gap. We also have a order block right there. And because there's 3 candles, we can also use this one. But I prefer this one. And let's see how price reacts if it comes back, what it does. So now the market showed its hand. We have our consolidation. We have our manipulation, and we are not here to catch tops and bottoms. We don't want to catch the top. Now we know, okay, market shows its hand. If price comes back towards this area, we're going to short this. But if price leaves this open, it's not a problem. We're going to look for other entries to get in. So for now, we're going to set this up. Stop loss above the high, and the target is our big purple line. Price comes back. What time is it? It's 3:30. This is your silver bullet, and price reacts from there. So you see the precision, guys. We know how we can frame order blocks. It's inside one of the previous videos on this channel. We know how to use displacement to frame a narrative for market structure shift, get the entry, and we now know with the daily bias how we can frame our targets around that. Perhaps we can also find a New York setup inside the retracement. Let's mark out New York right there. Let's see if it waits for us. Yes, it does. Gives a shallow retracement. And this is your New York retracement entry. And why is this? The same here. Price is fractal. So what we did with the Judas, with accumulation, manipulation, distribution, you should see this. This is your accumulation. This is your manipulation. And here is your distribution. So it happens also in sessions itself, not only the day. Personally, I only use the day for this, but if I miss the London entry, I'm looking for this inside a New York trade. So look for it is consolidating. Price already showed its hand that it wants to trade towards the previous day low. So I would have called this one, and then my stop loss will be at the open. At target will be the same target. And let's check what price does. And it hits it at the open exactly. So to recap this 2-part series about daily bias. First of all, you should know what the next day will likely do. So if it displaces above the previous day high, you should expect it to continue this trend to the upside. If it doesn't displace above it, you should expect it to hunt for previous day low inside the reversal. When you notice, you're going to dive into the lower time frames to frame your trade around a bullish or a bearish scenario. And you're going to use the Judas Swing or the Power of 3, whatever you want to call it, to use your knowledge about what the next day will likely do. In this example, if it's going to take the previous day high, buy below the open inside the manipulation, wait for market structure shift, and take your entry inside your entry model. And how does this entry model look like? I showed you in 2 examples, how you can frame a London setup trade or a New York setup trade, how you use fair value gaps and order blocks to buy or sell above or below the open to get your Judas Swing and get your most risk to reward, and to frame your daily buyers around the right setups. I really hope you enjoyed this video. If you have any questions, you feel free to reach out to me via Twitter or via Telegram. If you like this video, please like and subscribe and share it with all of your trading friends. And with that said, I will see you in the next one.